presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compact YouTube update for August 11, 2025. I'm Mo Ansari, President of Compact Asset Management, and thank you for joining me today. Let's start with the numbers. First of all, a reminder to get all of these updates, just go to compact.com and click on Insights, and that's where we have the podcast, the YouTube update, and all of the Compact announcements and all of the information. All of it is free. All you have to go is to go to compact.com, that's with a K, COMPAK.com. And if you want to subscribe to this channel, when you just click on the subscribe button, whenever I post an update, you will be notified. If you have questions, anything about your portfolio, anything you want to know, how we can help, call us at 800-388-9700 or just go to invest@compact.com. Let's start with the numbers. S&P, great week last week, up 2.44% for the S&P. The Dow is up 1.37 and the NASDAQ up 3.88. And that's the way I like to see the markets. Number one, number two, and number three. When the Dow starts to lead, that is not good. I like to see the NASDAQ in the lead, then the S&P, and then the Dow. So that's exactly what we saw. And we gained back just about all we had given up the week before. And we're right back up, close to all-time highs again in the market. Looking at technology, that was the best sector last week. Worst sector was energy, down about 1%. And it continues to drift lower after OPEC announced that they're going to increase production and they're going to fight for market share rather than hold up prices, which could be good for us. Oil prices down to $63.85. That's about nearly $9 lower than where it was at the beginning of the year. High yield interest rates just about steady, 4.23 to 4.27, not really going anywhere. The big news, which is really going to give us some indication on what the Fed is going to do, is tomorrow when we get the CPI, the Consumer Price Index. That's the inflation gauge. I'll tell you what the expectation is and what the outcomes could mean as far as interest rates go. And then we've got the Jackson Hole meeting later on this week, where the Fed chair gives a long speech outlining what he thinks about the economy, interest rates, and everything. So everybody will start shifting focus to that. But tomorrow's inflation number will set the stage for the next interest rate reduction. Is it going to be 25 basis points, no interest rate reduction, or even larger? It depends on what the inflation number comes to. One thing we are seeing is that the overall trade deficit is going down, especially with China. Our trade deficit, it's not evenly, it has improved by 9%, but some countries has gotten worse, Taiwan especially. But Taiwan is buying a lot of U.S. military equipment. That increases what we send to Taiwan, but that's what we're seeing there. New factory orders declined 4.8% month over month. Goods and services trade deficit improved by $60 billion. Looking at the tomorrow, as I mentioned, CPI is the big number. That comes out tomorrow. Consensus is expectation of an increase of 0.2, which would be lower than the 0.3 we saw last month. That would be good. Expectation is anywhere from 0.25 to 0.40. And it depends on how high that number comes or how low it comes. If it comes lower, that I think will clear the way for the Fed to lower interest rates, where they can say, well, unemployment is going slightly higher, number of jobs creating, the economy is slowing, we're seeing inflation, not a problem yet. So with inflation not being a problem, I think that would clear the way for the Fed to lower rates. Then on Wednesday, we get the PPI, the Producer Price Index. Then the important number is retail sales, which comes out on Thursday, and that will be 0.6 as expected. I think that's something to watch. How is the consumer holding up? Are they going to cut back on spending, or are they going to continue to spend? And then we have a couple of other reports on Friday. Looking at the technicals, still on the dailies, we're looking at a 3, but this could become a 5 if the market starts to fall off from here. But we are right up in this target zone that we had targeted from February, it had projected to 63.50. That's what we were looking at, is around 63.50 to around 64.50. That's what the target was, 64.50. We're at 6,400. Today we're at 6,407 this morning as a high. So we are right in this target range. Now, if we fall off from here, break the 20-day moving average with 63.17, 50 days 61.88. I wouldn't be surprised to see this coming down. This is going up, so somewhere see a correction here down to this. If you break this, then we start looking at much lower numbers, and this could become a 5 as a high in the market, and this could be the 3-wave high. We'll have to wait and see. These waves can change, but 5 is usually the termination, the end of the move, and that's what we're seeing on the weekly charts is a 5th wave, and that goes back to about 3 years, going back to 2022, 2021. That's where this chart starts at the end of 2021 right here, and it goes all the way, about 4-year chart, because each one of these vertical lines is 1 day of trading. But again, a 5th wave high, major support around 6,000, and that would be a pretty, not 6-7% pullback if we do see that. I'm not saying that's, but I'm looking for this also on the weekly monthly charts, 5, but the 5 wave goes all the way up to here, and that could be around 7,000, and could be, this goes back 10 years, this chart, or longer, about 15 years, starting from 2010. Each one line is 1 month of trading. So it could be next year, somewhere around there, that we see a top on the 5th wave, which comes in around 7,300, but we're pretty far away from that. NASDAQ daily is also a 3rd wave, but again, if we drop off here, support is at 21,000, then 20,300. We are 21,141 as of last trade, and 21,500 was the high, and that was the target, again, that we were looking at right along here, and we are right in that target zone right here. So that's what I'm looking at right now. Market is fully priced. If you get a higher inflation number tomorrow, that could cause some anxiety in the market. Then what does Jerome Powell say at the Jackson Hole meeting? That's going to create, in the meantime, anything can happen from left field, but the markets are fully priced here, and I wouldn't be surprised to see some sideways to lower movement in the markets. NASDAQ weekly also right in the target zone that we were looking at, around 21,500, which we hit this morning at 21,549. So we are right there. If we break above that, then we have to extend these targets, and it's called an extension, and I will put those numbers out next week. Looking at the 10-year chart, stuck still in this range of about 4% to about 4.5%, just going back and forth, up and down. We got to about 4.5 right here, then came back down to right about here, below 4.2, and today we're about 4.27. Not really going a lot of happening with interest rates. Gold did have a big move up, broke above this high, made a new all-time high last week. Today we're down a lot, about $85. This might be a top in the gold market. Again, just a little bit below the 36.50 target. We got it up to about 3,600 last, 35.80 or so last week. So we got close, but we still have a chance of going back up. But I think if we break below 3,400 and 3,370, then I think we have made a top in the gold market and could be headed towards the 3,000 mark. Oil continues to move lower, a little bit higher today, slightly higher, 11 cents higher after the big drop last week, after OPEC announced they're going to increase production. Bitcoin gapped up today, but again, still this seems like a 5th wave, but we'll have to wait and see. Bitcoin is gapping up today above the 20-day moving average. It gapped down, gapped up, which is a positive sign for the market. High yield bond market still stuck in this range, not going anywhere. If it breaks below the 50-day, that's when I would get worried, but it's holding its own, just slightly lower today, just about unchanged, not doing anything. So right now, I think the inflation number is going to be the key tomorrow. Higher inflation, not good. A lower inflation definitely will increase the expectation that the Fed is going to lower interest rates next month. Those are my thoughts. Those are my observations. Again, if you'd like to get some help on your portfolio, would like to get our opinions, need help to figure out exactly where you are, you've got some nice profits, you want to figure out how to keep them. As you've heard me say for the last 30 years, it's not what you make, it's what you keep that counts. How to develop a strong base philosophy that can handle the ups and downs. So you're not going up, not going down, you're not on a roller coaster. That's not how your portfolio should work. If you're on that roller coaster ride, sooner or later, it crashes. That's what I've seen. You make a lot of money, you lose a lot of money, make a lot of money, and when you add it all up over a period of time, you've gone nowhere. Having the slow and steady wins the race. Give us a call. We'll look at your portfolio. We'll do a free analysis. Invest@compact.com, invest@compact.com. Drop us an email or give us a call at 800-388-9700, 800-388-9700. Those are my thoughts. Those are my observations. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.